Good morning, traders. Today is September the 13th. My name is Neville, and I'll be taking a look at the week ahead. Okay, I just want to start with the YouTrading.com Forex heat map, and you can see that the bottom left-hand corner is pretty much solid green, top right-hand corner is solid red. So for me, this is more of a risk-on start to the day. If you look across the Swiss franc here and the Japanese yen, they're pretty much red across the board. So that is showing that safe haven flows are moving away from those two countries and into these slightly more risky, higher yielding commodity pairs. So, hopefully we'll get equities move, maybe reverse that sell-off that we had on Friday. Look into the Forex economic calendar. Monday, September 13th, very little in terms of economic data, but there's no tier one data. Tier one data starts on Tuesday, September the 14th, and we'll be looking at the Aussie versus US dollar. Go to the Aussie versus US dollar, you can see that we're kind of sort of finding support from this previous balance area here and the 20 and the 50 EMAs. So, depending on which way the market sort of feels the flows are going, we're at this sort of pivotal medium place. There might be a little dip down to these balance areas on the Aussie versus dollar on dollar strength, but I'm fully expecting another test of the 200 EMA and then go up to this 0.76 at some point. So I'm imagining that maybe the dollar CPI comes in weaker than expected. It's forecast to come in slightly weaker than previous readings. And if that happens, then there's no reason why the dollar shouldn't come down. On Wednesday, you start getting data from, say, like China, but the retail sales year over year, they're expected to drop. Obviously, data out of China hasn't been particularly good. And if we go to the active trader platform, for me, the People's Bank of China probably intervening in the markets and trying to sort of keep this Chinese yuan from dropping any further. So essentially dollars pegged to the yuan. Going back to the calendar, we'll have GBP CPI year over year. That's expected to appreciate to 2.9% from 2% from the previous year. So that's good. Looking for British pound to definitely catch a bid. If we go to the GBP USD, I marked off the weekly pivot. We found some support there. We've also got this moving averages sort of showing momentum to the upside. If we were to get a slight dollar tick up, then the pound could maybe drop down to this market structure here and the 61.8% retracement. But we've got a double top resistance, which held last week when the Bank of England were talking to Parliament. So I'm thinking that there's some stops up there at 1.389 ready to get taken. And on a daily, last week I mentioned that I was looking for a dip down and then get above this 1.398 before traveling up to towards the 1.41. All right, turning to the economic calendar, we'll have Empire State Manufacturing Index on Wednesday, along with industrial production, looking for hopefully a sort of reversal in the forecast. If we beat expectations, that'd be good for the dollar. And then if you look to New Zealand here, GDP quarter on quarter, similar to the Australian economy, there's lockdowns happening. So yes, GDP is going to be dropping, and that's the forecast. Drop to 1.2% down from 1.6%. This on Thursday, the September 16th, we get the Aussie employment change and unemployment rate. That's obviously going to be weakening as the economy in the sort of Australia is definitely being affected by lockdowns. And then again, we get ECB President Lagarde speaking, which will probably reiterate what she said last week around the PEP recalibration. The pandemic emergency purchase program is being tapered, but that's not exactly what the market really needs to see. They need to see that the general asset purchase program is being tapered and that the euro is going to strengthen. If you look to the dollar here, so it's going to probably be a euro dollar or Aussie dollar day on Thursday the 16th. We've got core retail sales month over month and retail sales here from the US dollar, plus the Philly Fed manufacturing index and very important unemployment claims. We had a better than expected unemployment claims last week. So there's probably going to be a slight revision up, but if that comes in again at low 300,000, then that's going to be good for the dollar. And then on Friday, we've got a little bit of retail sales data from the British economy, so month-over-month retail sales. And then on Friday, I'm thinking that the US opens, there might be a little spike up or down, but then the real sort of trend will happen after 3 p.m. British summer time when we get the University of Michigan consumer sentiment. So that's kind of the days. So Tuesday's probably an Aussie dollar day. Then Wednesday's probably a dollar CAD, maybe dollar pound day. And then Thursday, again, Aussie dollar and euro dollar day. Looking across the charts, I said British pound, we're expecting to go higher. US 500, so the S&P 500, on Tuesday the 14th, so tomorrow, we're going to get the Apple webcast where they tell us all about the latest iPhones, Apple Watches, and maybe some other product updates. So we could get a dip down, buy the rumor, sell the news, or maybe today, we get like a dip down and then ready for a buy off this 50 EMA tomorrow. Bonds, long-term bonds, we had some auctions last week that showed there's good demand. But then on Friday, they came back down to the same level as the Fed chair Jackson Hole was at. So, if you look left, right, this is definitely this 148, spot 45 is definitely the sort of pivotal line. So above it is bullish dollar and below hopefully weaker. Go to crude. Basically sideways on the energy markets, though obviously catching a bid. We're in the middle of this range, so $70 seems to be a good place. Looking to the left, euro versus US dollar, currently at a market structure and just below the daily EMAs that I follow. So we could get a dip down to this demand level. We had a drop-based rally, and these sellers here were the last of the sellers before the bulls took over. So there might be some more buyers down here if we do get dollar strength, euro weakness. I'd imagine there's going to be a real sort of defense of the 1.17. But if we do get flows into the euro and out of the dollar, then I'm looking to see this double top at 1.19085 get taken. So Apple, thinking that we might get a bit of a bid today on the Apple share price ahead of the news tomorrow. If we don't, and we get back below the range high from January 2021, then I'm thinking this just drops down to the middle of that range and the sort of top of this structure here, around $135.70. So just keep an eye on the economic calendar. Look for Aussie moves and dollar moves tomorrow, and then we'll see where we are going forward. Always keep an eye on your heat map, and just keep the levels. If we go to the British pound versus US dollar today, price is definitely finding the weekly pivot. So maybe put that on your charts, and go to the hourly. You can see that the EMAs are proving once again to be supportive, along with this weekly pivot and the Fibonacci retracements. So they're the things I'm looking at for this week, and I'll catch you later on.